Good morning. It's Jeffrey Christian. It's about 11:20 on the morning of Tuesday, the 11th of June here in New York. I want to talk about Saudi oil pricing, fear-mongering, and gold today. And going to go on a little bit longer than I could and should, because first I want to start with an anecdote about oil trading. And then I also want to wade into some politics and make fun of fear-mongering in politics, simply because there's a joke that I think is really funny that I love to tell about people protesting against gay marriage. But we'll get to that later. In 1981 and in subsequent years, I was part of a team at J. Aron that created a computer program that allowed for instant calculations of the arbitrage opportunities between petroleum futures that were traded in London and both over-the-counter and then later futures of oil trading in New York. It sounds mundane now, but in the early 1980s, it was actually pretty unique among trading companies. And again, initially the New York market was over the counter because NYMEX didn't start trading crude until 1983. Now, I've got here what we did because it's very salient to the issues about Saudi oil pricing. In London, the International Petroleum Exchange was formed in 1980. It started trading oil in 1981. It was sold to ICE in 2001 and is now called ICE Futures. And it trades primarily Brent oil. At the time, in the 1980s, it was trading oil, which was heavy, sour crude, in pounds sterling per metric ton, delivered into the ARA market, the Antwerp, Rotterdam, Amsterdam market, which was the market in Europe at market benchmark price in Europe prior to the creation of the Brent pricing system. They switched to US dollars from pound sterling sometime later in the 1980s. But for the subject at hand, the critical point is that in 1980s, they were trading oil in pound sterling, including, incidentally, a significant amount, small but significant amount, of oil sold into Europe by Saudi Arabia, Saudi Aramco. In New York, NYMEX started trading oil in heating oil in 1978, and it added crude oil in 1983. And it was trading in US dollars per barrel of light sweet crude delivered initially into the New York harbor. There was a problem with storage capacity in New York harbor, so in the late 1980s, they modified the contract to make it West Texas Intermediate. But here you have this pound sterling per metric ton of heavy sour crude delivered into Northern Europe, and then in the United States, US dollars per barrel of light sweet crude delivered into New York. The important part for the subject at hand, pound sterling per metric ton, including Saudi oil, traded in the 1980s. That's important because now there's this nonsensical blather about how in 1974 there was a U.S.-Saudi Arabia cooperation agreement, and it expired on the 8th of June. And fearmongers in the gold market are saying that the dollar is going to collapse because Saudi Aramco is going to stop accepting dollars for oil and or begin accepting other currencies for oil. That's not the case. Here are some of the facts. The 1974 agreement did not mention oil pricing, or US dollars. Those words don't even appear in the 4-page document that was signed in 1974. The negotiations for a new agreement have been going on for years. Both sides are jockeying for improved conditions. And the biggest demand from Saudi Arabia has been and continues to be, it wants more U.S. defense, not less. So the Saudi government is trying to extract more things out of the U.S. government in the new agreement. It's not trying to walk away from the U.S. And oil has been and priced and sold in U.S. dollars by Saudi Arabia since World War II, not 1974. This wasn't anything new in 1974. Oil being sold by Saudi Arabia was priced in U.S. dollars pretty much around the world, except in Europe where it was used ARA prices. And I should point out, most other things, goods and services, were sold and priced in U.S. dollars by trading partners around the world, starting after World War II, actually starting during World War II, not in 1974, not in 1971. Another thing, Saudi Arabia accepts other currencies as payments, and Saudi Arabia was selling oil in Europe in pounds sterling per metric ton well into the 1980s. The dollar became the denominator for oil traded in Europe, as well as base metals on the LME in the early 1980s, mid-1980s. It wasn't because of an agreement in 1974 with Saudi Arabia, nor with the LME trading companies. Now, I know you guys like this stuff. Here's the title of the 4-page agreement. An agreement between the government of the United States of America and the government of the Kingdom of Saudi Arabia concerning the development of trade and investment relations. There's a picture of the first page. It's 4 pages long. The only real important part is Article 1, where the parties seek to expand trade in goods and services between them within the framework in terms of this agreement, and take appropriate measures to encourage and facilitate the exchange of goods and services, etc., and to promote attractive trade and investment climates. This is in 1974. Over the course of the 1960s into the early 70s, Saudi Arabia was asserting more and more economic power and control over its own being. In the 1940s and 50s, when Saudi Aramco was created, it was half owned by the United States. The Saudis bought it down and took over 100% ownership over the course of the 60s into the early 1970s. The Saudis also created OPEC and OAPEC, which was the Organization of Arab Petroleum Exporting Countries, in the 1960s, try and slowly started to exert power and control, pricing power and pricing control in the over the course of the 60s into the late 1960s and into the 1970s. It really asserted control in 1973 when, after a war between Israel and its Arab neighbors, OAPEC and then OPEC to some extent too, imposed trade embargo on oil to the United States and Europe, throwing the United States and Europe into a severe recession in late 1973 into 1974. And the U.S.-Saudi agreement in June of 74 reflected both the Saudis and the U.S. realizing that they needed to improve their trade agreements, that things had gotten a little bit too raw during the oil embargo. And again, there's down below, you can actually get it and read it, and you can see what they actually agreed upon. And you will find that the dollar, oil, and oil pricing are not even mentioned. Now, let's turn to fear-mongering. Remember some of these things that you were told to be worried about and that you needed to buy gold? It was one fear after another, one conspiracy theory after another, one more reason to buy gold and silver put forth by fear-mongers who are trying to scare you into buying gold and silver, usually at too high of a price, from them. Strangely and thankfully, none of these things are real. None of them have actually happened when they were predicted, and none of them probably ever will happen. The global reset, whatever that was, never happened. The dollar collapse, well, the dollar's up like 30% over the last decade. Dollar confiscation, that hasn't happened. the gold-backed BRICS currency. That hasn't happened. And all of the BRICS governments except Russia say it's not going to happen. A new Great Depression hasn't happened. Hyperinflation, we got up to 9%. Hyperinflation is considered like 15% or higher or 20% or higher for several consecutive months. We never got anywhere near hyperinflation in the United States since the 1880s, 1890s. And inflation has come down from a peak around 9% to around 3.8, 3.2% right now, depending on which metric you use. COMEX hasn't run out of silver. The world hasn't run out of silver. Mexico hasn't run out of mineable silver reserves and resources. There's so many other things, and none of them have happened. See, there are people who drive their gold and silver marketing based on fear. We had one of the most prominent ones come to us in the early 1990s, and they wanted to market a newsletter that we would do. And as we were talking, they said, we can't market a newsletter from you, CPM Group. You guys sell your services based on greed. You help companies make money and save money. Companies and investors and governments make money and save money. Greed. We sell newsletters based on fear. This was like 1993, 1994. And the guy said, quote, if you want to write about how Hillary Clinton is going to make everybody use the same bathroom, we can market your gold newsletter. He's still one of the most prominent newsletter publishers in the precious metal sector. But, the fear-mongering isn't unique to gold and silver. And here's where I'm going to wander into politics. In 2000, the big fear was immigrants. And Democrats were lenient on immigrants. In 2004, it was gay marriage. And here's my joke. There was a cartoon in the New Yorker, two women in a bar, and the one saying to the other, it's not gay marriage that's threatening my marriage. It's the blonde he's sleeping with. I just think that's really funny. And that's why I'm willing to risk the opprobrium of offended conservatives who don't know what they're talking about. Will say Jeff shouldn't talk about politics because he doesn't know anything about it. In 2008, it was abortion. 2012, it was gay marriage again. 2016, it was Mr. Trump's Mexican rapists and job takers. In 2020, it was the replacement theory and personal freedoms. In 2024, it's wokeism. I said, I think it's wokeism today to my wife when I was preparing my notes for this, and she said, I thought it was reading, but that's beside the point. Actually, she said wokeism, I said reading. So what does it all mean for gold? It means nothing for gold. It's just another non-event not to worry about. Yes, the world is slowly moving toward a more diversified international currency regime. It's had a really tough time doing that, and as a result, you see the amount of foreign currency reserves held by central banks pretty much stable around 58 to 62% in U.S. dollars, and you actually see the amount of private financial wealth denominated in dollars rising, and it's now on a global basis something between 70 and 80% of private wealth, financial wealth, denominated in U.S. dollars. It's actually risen. But the movement to try to develop a more diversified, multipolar international currency regime, which is what central bankers talk about, has been going on since 1971. Actually, it predated 1971. 1971 was a point when the U.S. government said, we can't wait any longer. We got to move away from this. And if you get one of Barry Eichengreen's books, you'll see that the discussions about moving away from the Bretton Woods dollar gold system really started in the late 1950s. Gold will continue to be plagued by bad marketing based on fear-mongering. That is probably the most important takeaway from all of this nonsensical talk about what the Saudi-American agreement means for the collapse of the dollar. Gold will rise and fall on its own in response to world events, in response to financial and economic conditions, and response to gold fundamentals. Right now, one of the big gold fundamentals is the increase in investment demand around the world, really, for physical gold and for physical gold that is held in a way that avoids counterparty risks. And that reflects concerns about a host of issues that the world is facing. The one that it's not facing is that the Saudi Aramco will stop taking dollars in payment for its oil. That's all I have for now. We will be doing we just did yesterday, we released part 1 of a market commentary, which is available, you can, at our website, on silver pricing in China. We'll do part 2, which will be a more elaborate discussion of the silver market in China. Hopefully we'll get to it late June. It might stumble into July because we're really backed up with work here. On June 27th, we'll do an open forum for our clients where you can ask any questions. We won't have a formal presentation lined up. Our clients can send us questions in advance so that we might have some charts to help illustrate our responses, and we can organize it all. And then on the middle of July, on July 16th, we will release our Platinum Group Metals Yearbook for 2024, and we'll have an online briefing. That's what we have for now. I'll talk to you again on Friday. In the meantime, you can go to our website, get a lot of free reads, find out what all we do for clients in terms of helping them manage their exposure to precious metals and commodities. And you can always send us an email at info@CPM Group and ask us how we might be of service to you. Take care of yourself. Take care of those around you. Do something good for the world this week, and we'll talk to you on Friday.